We have a question here from a new subscriber who says that they have always been predominantly trading the FX market in isolation without really giving any attention to other asset classes. And they've been quite surprised to see us give so much attention to other asset classes and things like volatility indexes and plenty of other stuff that they've never really heard before. And they want to know whether they have to learn, all these things, or whether it's possible for them to just focus on FX without giving any attention to the other things that we watch and use. So I think this is a very interesting question, and it's really going to be both a yes as well as a no answer from me. Let's start with the yes answer. Yes, I think it's possible to trade FX in isolation without worrying about other asset classes or things like volatility indexes, etc. Any asset has certain drivers that you need to focus on, and for FX, like most assets out there, really, the biggest focus is always on monetary policy. That's always going to be your base to work from, your start. And apart from that, there's also, of course, things like economic data and fiscal policy and geopolitics, and all of that can often provide some excellent trades in the FX space without really needing to spend any additional effort on watching other asset classes. Now, I think a really good and recent example of the types of pairs and trades that you are going to be wanting to focus on with that aim is something like the euro pound or euro sterling, where the drivers of this pair had really nothing to do with other asset classes or things like volatility indexes or any of that. It was just plain fundamental analysis, looking for a currency that was expected to be weak and a currency that was expected to be strong, and basically pairing those two against each other. And the reasons for us trading the euro pound to the downside was mostly driven by monetary policy, with things like negative interest rates being in focus, but there was also relative growth dynamics and some other qualitative aspects like the vaccine rollout, etc., that came into play as well. So with a trade like this, there wasn't really any need for additional analysis, around other asset classes, at least, apart from keeping an eye on something, like the BTB Bund spread, for example, which usually has an inverse correlation to the euro. So, this time around, we didn't really see something like the BTB having an effect on something like the euro pound, but it could have had, so that is something just to keep in mind. But if you just look at this trade as an isolated example, you didn't really have to look at anything else. So there are FX currencies and trades that you can take like this that doesn't have to solve for other assets or looking at the various metrics and tools that we use on a daily basis. However, without any focus on other asset classes, I think it will be very challenging for you to get a firm grip on currencies that are sensitive to other asset classes. So currencies that are risk sensitive, like the high betas and the safe havens. If you plan to only focus on FX without ever looking at something like additional asset classes, then I think it's going to be a very narrow scope, a very limited options that you'll be able to trade with. The second part of the answer, which is of course the no part, so can you trade without these things? I would be leaning towards the no part. I think the question shouldn't be, can I trade without having knowledge of other asset classes? I think the question should be, why would you want to trade without it? After learning how important and beneficial it can be for your trading. If I think of the global macro market, there are so many additional opportunities that opens up when you broaden your horizon to include other asset classes into your analysis. Even if you don't end up trading any of those assets yourself, for example, once you learn how important something like risk sentiment is for high beta and safe haven currencies, why wouldn't you just have a quick look across something like equities and something like commodities and bonds, just to get a quick sense of where the risk zone might be trading in order to find some additional trading opportunities? I think the amount of knowledge that you require to be able to understand how various asset classes relate to each other and how they are connected to each other isn't really that overwhelming to grasp, if you're willing to put in some additional time to study and understand them. And once you do, it opens up your understanding of how markets work so much more, and will give you such a depth of understanding for how the FX market works in general. When it comes to things like, volatility, for example, we focus a lot on things like the VIX. We focus a lot on specific assets, volatility indexes. Like when we trade oil, we look at OVX. When we trade gold, we look at GBZ. We have all of this information. It's not something that'll take you years and years to grasp. Knowing how something like, let's take an example. Knowing how something like inflation expectations, for example, how that affects various asset classes like commodities and bonds. Knowing how things like yields can in turn affect things like currencies and even gold, or learning how yield curve, how that relates to specific equity sectors and how that might affect certain equities, learning how bond yield differentials can help you track currency pair movements. I think these types of things, for me, they're such a valuable addition to your trading toolbox. And it's not things that'll take you decades and decades to learn. With the help of something like the video library that we have, as well as the Q&A. So obviously this is coming from a Q&A question. We have the analyst chat, we have the webinars. I think we are definitely here to help you if you need some additional guidance, on learning these types of things. I think to sum up, I can fully understand if you don't want to learn about additional markets and only want to focus on FX. There's absolutely nothing wrong with that. And there will be trades that you can take advantage of by just focusing on FX, that's for sure. I mean, the euro pound was a great recent example of that. But at the same time, I would highly encourage you to try and broaden your knowledge, to some extent at least, of other markets as much as you can. Where I sit right now, I don't know where I would be in terms of my own trading capabilities if I didn't put in the effort to learn as much as I can and broaden that scope out. And you know what, if the idea of learning all these additional things seems a bit daunting, there's absolutely no rush, right? Take your time. We have well over 300 videos by now inside the video library alone, and it deals on various topics, right? So various assets. So maybe, start with one asset at a time, saying that you want to learn about equity. So type in, equities and start just with equities. Take your time, go through the various videos, then, move on to the bond market, start with those videos, go through them, take your time. There's no rush in trying to chase through it. Take it one step at a time. And if you need any help along the way, we'll be here to assist you in that. But don't be afraid to broaden your scope and your horizon in terms of the different asset classes out there. The reason why I know it's doable is because I did it myself, and I can assure you, if you see the scores that I got in school, they were far from great. So I know lots of people can do it because I was able to do it. It just takes some willingness. It just takes some patience. But I can assure you that it will definitely be worth it in the end. So I hope that helps with the question. And if there's any other questions, please don't hesitate to reach out.